విద్యా విధానంలో డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ దేశంలోనే మొట్టమొదటి సార్వత్రిక విశ్వవిద్యాలయం. దాదాపు 2.5 దశాబ్దాలుగా దూర విద్యా విధానం ద్వారా కంప్యూటర్ కోర్సును అనుసంధానం చేస్తూ BA, BCom, BSc డిగ్రీ కోర్సులను అందిస్తోంది. పోస్ట్ గ్రాడ్యుయేషన్ స్థాయి, డిగ్రీ, డిప్లొమా స్థాయి కోర్సులను ఔత్సాహికులైన విద్యార్థులకు అందిస్తోంది. డెవలప్మెంట్ స్టడీస్లో సెంటర్ ఫర్ ఎకనామిక్స్ అండ్ సోషల్ స్టడీస్ ద్వారా MPhil, PhDతో పాటు విశ్వవిద్యాలయమే స్వయంగా దూర విద్యా విధాన అంశంపైన PhD వంటి పరిశోధన కోర్సులు ప్రవేశపెట్టింది. రాష్ట్ర వ్యాప్తంగా సుమారు 4.5 లక్షల మంది విద్యార్థులు ఈ విశ్వవిద్యాలయం నుంచి ఉన్నత విద్యావకాశాలు పొందుతున్నారు. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం స్థానికంగా స్వయం బోధనా పద్ధతిలో ముద్రణ రూపంలో రూపొందించిన కోర్స్ మెటీరియల్ అందిస్తోంది. కోర్స్ మెటీరియల్ అధ్యయనానికి సహకరించే విధంగా రేడియో, టెలివిజన్ పాఠ్యాంశాల ఆధారంగా కార్యక్రమాలు ప్రసారం చేస్తోంది. అధ్యయన కేంద్రాల ద్వారా ఏర్పాటు చేసే సలహా సంసర్గ తరగతులు, సైన్స్ ప్రాక్టికల్ సౌకర్యాలు విద్యార్థులకు స్వయం అధ్యయనానికి ఒక చక్కటి అవకాశం. ఇవి విద్యార్థి సమీపంలో ఉండే అధ్యయన కేంద్రం నుంచే పొందొచ్చు.
Good afternoon. We welcome you to Dr. B.R. Ambedkar Open University live interactive teleconferencing program, and the title of the program is Capital Markets in India, and this will be useful to the students of final year M.B.A students who are pursuing with finance specialization. And let me introduce the experts for this occasion. To my left, immediate left, Prof.R.K.Swamy, Dean Faculty of Commerce, Dr. B.R. Ambedkar Open University. He has been working in the university since so many years, and he published so many books, papers, and he is an expert in finance area. To my extreme left, Prof.R.K.Mishra, he is a well-known person in finance area, director IPE, and he is having lots of books to his credit, papers, and he is there as member at national and international committees. Now let me request you that the persons who are interested to put questions, you please put the questions after completing our discussion in a half an hour. After that, you can put questions by using the numbers 04027031431. Another number is there, 04027031432. Another number is also there, 04027031433. Let me repeat the four numbers, 04027031431, 04027031432, 04027031433. These are the numbers. Let me introduce the topic to all of you. As you know that the total economic system is depending on the capital markets, and India has no exception to it, and the students and the investors who are going to invest their funds rightly in the capital markets, and to get the return on such investments properly, there should be a clear understanding regarding the capital markets. So the capital markets are having a lot of importance in the economic system of any country like India also. Now, let me start with a question to our Professor Mishra. What is financial system?
Thank you, Professor Rao, and thank you, Professor Swamy. We have come for a very important discussion. As Professor Rao told, capital markets, they act as the foundation for the development of an economic system. We have to note one very important thing. World over, there are two types of systems. One is bank-based economic systems, and the other one is capital market-based economic systems. So far, India has been a bank-based economic system, but now things are changing. We are no more a bank-based economic system. Capital markets, as Professor Rao told, they play a very, very great role. But as Professor Rao has asked me, capital markets are just a part of the financial system. In the financial system, we will have capital markets on the one hand and we will have money markets on the other hand. Capital markets, they provide capital for long-term needs for 5 years, 10 years, 50 years and even beyond, whereas money markets, they provide us an instrument of liquidity which can help us on overcoming the needs of our working capital and meeting our day-to-day needs. And we have been seeing that over the years, both the parts of the financial system are becoming very, very important. Besides this, we also have regulatory systems as a part of financial system. And the regulatory systems, they control both the capital markets and the money markets. And hence, I think anybody would agree that an economy cannot run without capital markets and without money markets. And hence, financial markets, they play a very great role in the economic development of any country and also of our own country.
Thank you, Mishra ji. See, as he told that the financial system is bifurcated into two categories, that is the bank-based system and the capital market system. Now, the related question to it is, can I ask a question to Professor Swamy? Explain how securities market is important.
Securities market is very important for any country. Every day you will be noticing in all the newspapers, TVs about the securities. Securities are being traded in the stock market. In 2007, an amount worth of $48.82 trillion worth shares were traded. That is in 2007 and 8. 2005, it was $47.39 trillion worth. So, you can imagine how rapidly the amount of shares are being traded in the securities market. Securities market, it is gaining momentum not only in India, across the world. Everywhere people are investing their own monies in the form of securities alone. So, out of this, US alone contributed for 43.12% of the securities worth that was traded in the capital market. So, we can understand how significant, how important the securities market is for the entire world. We need not confine to the country, but for the entire world. So, 50% of the shares are being traded by US alone. That is how securities market is very vital for any economy of the country.
Thank you, Swamy. Regarding the importance of securities market, you have explained not only in the Indian securities market, but also in the global securities market. As you told that almost 43.2, rather around half of the securities are taken up by the US securities market itself. And another linked question to this is global securities market, what would be the role of the global securities market. Can you explain, Mishra ji?
Thank you, Professor Rao. Worldwide, all the countries are deeply involved in accelerating their economic growth. The developed countries are growing at a rate of 2 to 3% per annum. We can take the case of United States of America, we can talk of France, we can talk of Germany, we can talk of Japan. They are growing at a rate of 2 to 3%. The forecast for the USA for this year is about 3%. Whereas countries like China, India, Singapore, Thailand, Vietnam, and a few other countries, you can take the case of South Africa, they are growing in the region of 6 to 11% or 12% per annum. Worldwide, we have the problem of resources. And if we have to accelerate the speed of growth, we require investments. The question is from where these investments can come from. These investments can come through aid, and I think there has been a great discussion on economic aid, Bretton Woods Agreement, and thereafter it was agreed in 1983 by Brand Commission that developed countries will give 1% of their GDP to developing countries for economic aid, but it is much short of what was proposed then. The aid coming to developed countries is about 0.2 to 0.3% per annum. On the other hand, developed countries have also to grow. So how this growth can be achieved? This growth can be achieved through savings, and we see that governments world over are not able to save much money. They are spending money on different items. This money can come from deficit financing, but if there is deficit financing, then we will have the problem of inflation. Therefore, much of it can come from savings, and these savings get invested into capital market. So global capital markets have to fulfill the demands of the finances for economic growth, and we find that the demands on these markets are increasing more and more. Now, Professor Swamy was talking about stock markets and capital markets, and we find that in Luxembourg we have the biggest debt market, which provides about 50% of debt capital all over the world. In America, in USA, we have the New York Stock Exchange, and in India we have NSE and BSE. So we find that 40 to 50% of the investment needs of different countries of the world and the transfers that they are taking place, they come through capital markets. Capital markets can play a great role. In fact, it is good to good to see that the money comes from capital markets, because if money comes from capital markets, then there will be less number of intermediaries, and there will be a better appraisal of the projects as compared to bilateral agreements, as compared to funds flow through multilateral agreements, as compared to bank transfers from one country to another country. And in the times to come, capital markets globally will play, as Professor Swamy told, a very, very great role. About 40% of the gross domestic product of different countries will be traded on the capital markets of various countries.
Yeah, Professor Mishra ji has explained the scenario or the role of the securities market in the global financial system. What would be the organs of the securities market, and how do they help us in meeting the requirements of the financial system? Can I ask this question, Swamiji?
Thank you, Professor Rao. Let me pick up from the Professor Mishra's discussion only. When we look around, you will have individuals and institutions. Some of the individuals or institutions are savers. Whatever revenue they are getting, they are saving a part. A part of the revenue is being saved. You will also find there are deficit generators. On one hand, we are saying that some people are generating revenue, some people are generating surplus. Sorry, it is not revenue, it is surplus. Some people are generating surplus, some people are generating deficit. So, when we talk about the individuals or institutions, whatever money is being saved, we have in the form of liquidity, liquid cash we have. Why do we keep liquid cash with us? Probably the reasons could be transaction motive, precautionary motive and speculative motive. These three are the possible reasons for retaining cash with us. Whenever we have excess amount, whenever we have surplus money, we may think about buying or investing this amount in the form of two assets. One is physical asset, other one is financial asset. When I say physical asset, it could be anything. It could be plant and machinery, it could be gold, it could be land, it could be anything. It will be in the form of fixed asset. So, why do we invest in fixed asset? Probably to acquire land, to construct a house, probably we may expect appreciation in the future market. That is how we think and we invest in the fixed assets. So, there are people who are also thinking to invest in the form of physical financial assets. When I use the word financial asset could be securities, that is equity shares, preference shares, debts, these kind of things. So, these are called financial assets. We will be investing some of the amount either in the form of physical asset or in the form of financial assets.
As Professor Swamy discussing about the organs of important organs of securities market, what he is telling is regarding the what you call surplus and deficit.
This is one of the element, one of the organ. That is what I wanted to say is I am talking only from the angle of investors. Investors in the sense people are creating surplus and they are attempting to invest either in the form of physical asset or in the form of financial asset. This kind of category, this kind of organ is called investor or investing category. We do have other category. When you look at any corporate organizations, for the development of any country, what is important is capital. Capital is very important. Without capital, we cannot do any business, we cannot start any commercial activity. They need money. Where from we get the money? We have to get the money only from the savers or investors. Or Professor Mishra already he has already explained that foreign direct investment or foreign investment. So, that is one thing, but here as it is, some people are generating surplus. At the same time, there are some people who need capital. So, that kind of people, they are going to issue securities in the market and mobilizing the savings that are generated by the surplus people. So, that will come second organ. Investors is one organ, and issuers, it is corporate sector is going to be second organ. These two are the important categories. One are providing cash or capital, the other people are mobilizing or investing others' money. Since they do not have the money with them, they are investing, they are using others' money. Now, there is a third category of organ in the securities market, that is intermediaries. Intermediaries are those people who are connecting investors and issuers.
They are providing a link.
So, they are establishing a link, they are linking, they are connecting points between the investor and the issuer. So, the third organ is nothing but financial intermediaries. When we have these three organs, investors, issuers, financial intermediaries, the next important organ is regulatory mechanism. The government of India is regulating the entire activities that are being transacted in the capital market, either by the investors or by the issuers or by the intermediaries. The ultimate idea of any government is to protect the interest of investors, that is savers. This is how the
Yeah, from the discussion we have, we can make out that 4 important organs of this securities market. One is the investors, and the next one is issuers, and the third one is intermediaries, and last one is the regulatory mechanism. As we get so many complaints from the public that they are not having the protection to their investment. So that's why there is a need for a regulatory mechanism in the financial system. And during our discussions, I also make out that some of them are saving and some of them are using it for their purposes. So the corporate sector, most of the corporates are using their money for developing business or starting business or something else. So can I put the question that what would be the corporate requirements and how these requirements are met through the security market? Mishra ji.
Thank you, Professor Rao. Corporates, they require money for projects, and the art of raising money is tackled by project financing. There is a discipline of project financing. Now, this project financing or project finance can come from banks, it has to come from promoters, it has to come from associates, but a large part of it should come from the capital markets. And what there happens is that the promoters, they will prepare their feasibility report, they will prepare their detailed project report, and based on these they will approach the capital markets, and they will float the securities. Now, normally it is found that in the case of large enterprises, about 85 to 90% money has to come through securities, and in the case of medium enterprises, this money is about 65%. In the case of small enterprises, this money may be about 25 to 30%. Normally, capital markets, they cater to the needs of very, very large borrowers, because these large borrowers have credibility, they have credit rating, they have an assured rate of return, and they also have assets to pledge. Now, based on these considerations, capital market treats them on a different footing. In our country, we didn't have a capital market for small scale industries, but now we have created capital market for small scale industries also, and that is known as the third tier of the capital market. Most of the project finance through capital market is raised through shares. The shares can be broadly of 2 types. We can have ordinary shares, we can have preference capital, then preference share capital can also have different categories. We also raise money through debentures, and these debentures can be convertible debentures, they can be non-convertible debentures, and we find that as dividends decrease and interest rates they go up, there will be a trend to mobilize money more and more through debentures, because debentures can give a very handsome return. But if that is not the case, and economy is in a buoyant condition, economy is functioning very well, and trading and manufacturing is highly profitable, in that case you will see, as Professor Swamy was mentioning, the issuers or those who buy the shares, those who buy the securities would like to invest more money by way of equity shares. As of now, we have seen that during last 6 months, more and more money is being raised through debentures. In our country, it is found that about 25 to 30% of the total needs of the capital of the corporate sector is coming through securities. Every year, National Council of Applied Economic Research publishes a survey of the demand of the corporate sector for money from the capital markets. And such a survey also gets published in the Vikalpa, which is published by the Indian Institute of Management, Ahmedabad. In fact, one of the former directors of the Reserve Bank, one of the former CMD chairman of the Reserve Bank, Professor Rangarajan, was doing this survey for about 20-25 years. He started doing this survey in 1978 and carried this survey up to 1984, and this survey is also is still being continued.
Yeah, we have discussed many aspects on capital markets. In between, let us take a small break and come back. If you take the question as you explained regarding the corporate requirements and how major companies are getting finance, medium companies are getting finance, small companies are getting finance, and even of late the government has taken necessary steps for providing a facility to small scale industry in the form of third tier in the capital markets. Now let me take the aspect of financial intermediaries. Professor Swamy Garu, can you explain on financial intermediaries? We have discussed and you told that is one of the organs of the securities market.
Yeah. One of the important organs of the securities market in India is financial intermediaries. Financial intermediaries in the sense it's a connecting point between the issuer and the investor. So, there must be some mediator to bring together these two categories of people. Under the financial intermediaries, we have merchant bankers, we have lead bankers, we have underwriters, we have brokers, we have sub-brokers. All these people will come under the financial intermediaries. Their role is to connect the investor and the issuer. With this, their job will be over. In the sense, they are professionals, they are expected, they are supposed to be registered with the SEBI. Until unless one registers with the SEBI, they cannot transact any business as a stockbroker or a sub-broker or underwriter or anything. So, these people play vital role in connecting these two people, number one. Number two, they help the capital market to mobilize the finances required by the corporate sector. That is how financial intermediaries are coming into the picture.
Yeah, we discussed on the regulatory. We will discuss the regulatory mechanism after taking a small break. We will come back. Thank you, the viewers, and we will come back. I welcome you again to this interactive teleconferencing program on capital markets in India. Now, we have already discussed what the financial system is, the global scenario of securities, the important organs of security market, the requirements of corporate sector, and about the financial intermediaries also. Now, as you know that public are coming with so many complaints regarding the protection to their investments. So, let us have a detailed knowledge on the regulatory mechanism that is available in India to protect the interest of investors. Mishra ji, can you throw light on this regulatory mechanism?
Thank you, Professor Rao. There are three components. One is macro. At the macro level, a very innovative step has been taken by India during last year. On the pattern of America, Germany and many other countries, Government of India has set up a financial stability board, and this financial stability board takes care or rather it oversees the working of all the financial institutions in India, including Reserve Bank of India also. There was a problem there. The questions being raised whether RBI comes under the control of this board or not, or this board is superior to RBI. But finally, it has been resolved, and the chief of the RBI is also head of the Financial Stability Board, and chairman is the Minister for Finance, Government of India. So this board, it looks into the working of the entire financial system in our country, how it is working. Is it able to achieve the goals of the financial system? If it is not able to achieve, what policy should be formulated and how it should implement, how the performance of the system should be judged. Now, at the second level, we have the Reserve Bank of India, and Reserve Bank of India, it looks, it takes care of all the institutions in our country. These could be institutions which deal with commercial banking. These could be the institutions which deal with the industrial finance or long-term development institutions. These could be the institutions which deal with cooperative finance. And then we have SEBI, Securities and Exchange Board of India, which was created roughly about 22 years back in this country. And this is an institution which actually deals with the problem that we are discussing today. This institution was brought to relieve Reserve Bank of India of its function of controlling the capital market in our country, and in its own right, Securities and Exchange Board of India, it does a number of things, and I think Prof.Swamy will throw more light on that. But one very important thing is insider trading. You have seen that the American system takes insider trading very seriously, and many eminent people in the US, including, I think you might have seen the case of Rajat Gupta case, I think we are talking these days, and Rajat Gupta has been charged, I think his firm has been charged with the information that has been passed on to Rajratnam and I think his firm, and the board over there, the Securities and Exchange Commission, we call it. Securities and Exchange Commission will, I think, start hearing the case, I think, from this week onwards. In our country also, as Prof.Swamy told, the extent of capital market is increasing. The extent of securities market is increasing. People are now more, they take greater interest in securities than security in our country.
Okay.
Everyone wants to invest money into securities, and therefore security markets are becoming an object of attention of each and everyone, from a small kid, I'll say, to a person who is retired, because the retired person puts all or part of his wealth through mutual funds, etc. And mutual funds, they buy securities in the securities market. So Securities and Exchange Board of India, it looks into the issuance of securities, that is one. It looks into the health of securities. It looks into the working of brokers. It looks into the working of underwriters in our country. It looks into the working of merchant bankers. Prof.Swamy was talking about merchant bankers. It rates rather merchant bankers A, B, C, and D, because in our country all kinds of institutions were coming up, and they are claiming to be merchant bankers. Then it started rating. It also looks into the functioning of credit rating firms in our country. We have a few credit rating firms. Earlier we had no system of credit rating the securities, but now we have the CRISIL Care and many other firms. They have come into these into the area. Regulator is very important. Today in our country, government is withdrawing from many sectors. It is also withdrawing itself from the financial services sector, from the financial markets, etc. But if government has to withdraw, then government has to put in institutions which are very sound as regulator. And we see that in our case, SEBI, I think Prof.Swamy will throw more light, which is an institution of 22 years. As compared to that, when you look into USA, we find that Securities and Exchange Commission was set up much before. Prof.Swamy will again throw light on that. Or we can say Securities and Exchange Board of UK. Our Securities and Exchange Board of India has been patterned on the the British model. But I'll say that in the last 20-22 years, our Securities and Exchange Board of India has done fantastic job. Lots of steps have been taken by the government, and very important step is that the present chairman, his term is not of 3 years. They want to give a longer tenure to the chief of the regulatory institution, so that regulatory institution can create policies, can implement, can remove deviations, and can have stricter regime, which can ensure that the interest of the investors are protected. At the same time, the capital market also functions very well, and we see that the present chairman has been given a tenure. Mr. Sinha has taken over from Mr. Bhave, and his tenure is about 5 years, and tenure has been sanctioned by a person no less than the finance minister, government of India. In our country, SEBI is going to play a very, very great role. I would just take a few seconds more. A time is coming when India will become the hub of the capital markets all over the world, and I am sure that India will replace the New York Stock Exchange. India will replace the Luxembourg. The city, which is the capital market of UK, will be replaced by India, and the French bourses and French capital market will be replaced, because you see the location of India in the world map. India is just in the middle, and India can transact with any country of the world at any point of time. And within that, I want to give a good news to you. Location of Andhra Pradesh is the best, and at one point of time we wanted to make Andhra Pradesh as the financial city of India. We were making a great headway. We wanted to make Vizag as a city, financial city of India, because rents are low here. We have got the technology here, we have the financial brands here, and we have all that here, and based on that only we created a financial district, and IREDA shifted from Delhi to Hyderabad. At one point of time, we were also thinking that State Bank of India will shift from Mumbai to Hyderabad, but that didn't happen, because when you go through the State Bank of India Act, in the State Bank of India Act, the then people who created the State Bank of India Act said that Mumbai or Bombay will be the place where the SBI headquarters will be there. If it would have been there, I am sure it would have shifted. So regulators can play a very great role. Regulator in our country, sir, Professor Swamy Garu and Professor Koteswara Garu, regulator in our country should do more work on development, and they should develop our capital market in such a way that entire money of the world comes to India, and from India becomes, I think, the place from where allocation of money can take place from the other parts of the world. So I think their shift should go more towards, I think, the development part than the control part.
Yeah, thank you, Mr. Ji. As from our discussions, I feel that there is adequate regulatory mechanism for protecting the interests of investors in India in the form of FSB, RBI, SEBI and others. Now, Swamiji, can you explain what type of securities we use, how many types of securities are there to provide such type of investment and meeting the requirements of the corporate sector?
Basically, there are equity shares, which is very popular. Every one of us aware of equity shares. So, equity shares is one of the important sources of finance, or one of the important security that is being issued to the public, that is being traded in the stock market. The next to equity, debenture capital. Debentures could be partly convertible, fully convertible, non-convertible. These three things are going to be traded in the trade market. When we talk about the capital market, we have capital market can be divided into two. One is primary market and the other one is secondary market. When we talk about primary market is concerned with the issue of new securities to the public. So, it is initial issue or public issue to the public. In the same primary market, we can also go for rights issue, bonus issue and private placement all these things will take place only in the primary market. At the same time, when we talk about the securities like equity, bond and this kind of things, immediately we are offering to the public. There are various methods of fixing the price. At times what happens is, the shares will be offered to the public at the same value in the sense face value. Suppose if we say the face value of a particular company security is 10 rupees, it can be offered to the public in the share market, in the capital market at rupees 10 only, that is par value. In case if you offer at more than the face value, we call it as a premium. Sometimes we may offer at lower than the face value. This kind of situation is called discount. Why we offer our securities in the market either at low or high price? The reason is very simple. If the firm has proven ability in the market, if the firm has history of earning profits and paying dividend to the equity shareholders, automatically it creates a kind of opinion in the public that it is doing well, it is faring well in the market. Hence, everybody is tempted to invest their money in this kind of firm. So, automatically what happens is, the value of the share will go up. In case you are a new entrant in the market, you are not known to anybody, or you may be incurring losses continuously over a period of 4 or 5 years. Under those circumstances, you have no option but selling the shares at lower than the face value. These are the things. At the same time, we do have rights issue, we do have bonus issue, and we do have private placement. So, rights issue is only for the existing shareholders, selling the shares at lower than what the market price is. It is a privilege to the existing shareholders. In case of bonus issue, it is only conversion of reserves and surpluses into equity share capital. Here you wanted to just convert, it is only transfer of surplus money towards capital. When we talk about private placement, when you wanted to go for the public issue, you may entrust to a group of people about the allotment of the shares. These are all the things about the primary market.
Yeah.
We do have secondary market also. In the secondary market, all the shares that are being allotted, after the allotment, those shares will be traded in the secondary market.
Yeah, thank you, Swamiji. You have explained the different types of securities, primary market, and the various what you call aspects that are dealt in the primary market. And you mean to say that shares can be offered on par, premium,
discount.
on discount. And see, can you explain, Mishra ji, what kind of securities offered in primary market?
In primary market, what happens is that we issue securities, where we come for the first time, and maybe I think, in primary market we have shares, I think.
Equity shares.
Equity shares, we'll say. Equity shares we issue in the primary market.
Same bonds.
We issue debentures. And as Swami was suggesting, debentures can be of different categories. We may have convertible debentures, we may have non-convertible debentures, and we may have, in primary market also, very importantly, we can issue instruments which can help us in mobilizing working capital. It's only in India that working capital comes from banks, and we go for hypothecation, mortgage, and we talk of Tandon committee report, Buller committee report. In many countries, as I was submitting earlier, they are fully capital market based, and the way firms approach capital market for project finance, long-term finance, they also approach capital markets for working capital. And that project finance will include not only long-term capital, but will also include that part of working capital which is permanent. So, in India also we have started seeing that many firms are approaching capital market for working capital purposes, and one can be commercial paper. Now, commercial paper volume is very, very large. In our country, commercial paper started in 1990, and America commercial paper issuance started in 1860.
Oh.
So, we took about 130 years. Around 1986, we had the Sukhmay Chakravarti committee report. Sukhmay Chakravarti was a very great economist, was a member of Planning Commission, and the report was there on the monetary money markets. He submitted a report and he suggested that based on a US pattern, we should also allow firms to raise working capital through this kind of notes, through we put that into application in 1990, and the money that we raise, it goes on changing. When interest rates increase, the money raised through commercial paper also increases. For instance, now money raised through commercial paper is about 30 to 40,000 crore. This is because many firms, they don't want to go to banks, because if you go to bank, you have to have a credit line, you have to have a board proposal. Here, we can just approach through credit.
So many
agency.
formalities.
Very, very informal, and you can do it very, very fast, very, very quick, and they don't require. You can sell off your commercial paper, and there is a secondary market in the commercial paper also. So there are a number of now securities, and we are seeing very interesting thing in Germany. I was discussing with Swamy Sahab. There are 400 securities in primary market. In India, the 1956 Companies Act, it is responsible for lack of diversification of securities. Our Companies Act was passed in 1956. In section 36, Indian Companies Act says that there can be two types of securities which companies can issue. One is debt capital, another one is share capital,
equity capital.
So they have limited. I am sure that the new Companies Act which is coming, which if it is passed in the current session of Parliament or next session of Parliament, like Germany, we will have different kind of instruments coming in the capital market.
Yeah, thank you, Mishra ji. Yeah, can you throw a brief light on secondary market, Professor Swamy, because the time is very short.
When we talk about
in 2 minutes, if you could make it.
Okay. When we talk about the secondary market, the shares which are already allotted to the shareholders are being traded in the secondary market. When you wanted to transact or when you wanted to sell or buy your shares, you have to approach the stock exchange. Stock exchange is a ready marketplace where you can either buy the shares or sell the shares. So, that is how secondary market will come into the picture. Secondary market, stock exchange is playing vital, very key important role. In fact, it helps the investors by collecting the data and providing to the shareholders on one hand. At the same time, it regulates, it controls the fraudulent practices that are taking place in the share market. In spite of the fact that stock exchange is working effectively, there are many lapses on the part of stock exchanges, in the sense lapses in the sense weaknesses. To overcome the weaknesses, the government of India has created over the counter
Trading.
Stock exchange of India. It has been created. In the stock exchanges, in fact, there were many lapses. There were many lapses in the stock exchange, like rampant speculation.
Can you brief it in 1 minute so that, because the time is going to be up.
Okay. The major defects found in the stock exchange was rampant speculation, inside trading, oligopolistic trading, limited power trading, and the lack of single market. To overcome all these things, the government of India has started OCTEI. So, to overcome all these things, the very idea, the very objective of OCTEI is ringless trading, national network, computerized totally, exclusive list of companies to be making public after.
Thank you, Swamiji. Yeah, we dealt the subject on capital markets in India. We throw light on financial system, its importance, the global scenario of securities market, the important organs of security market, requirements of corporate sector, the other things like primary market, regulatory mechanism, intermediaries, the SEBI, RBI, FSB and all those things. See, our experts, I am grateful on behalf of Dr. B.R. Ambedkar Open University, Dr. Swamy, Dean Faculty of Commerce, Dr. B.R. Ambedkar Open University, in spite of the busy schedule, he has come and participated in the discussion. Especially, we are grateful to Professor R.K.Mishra. He is always busy and as I told, he is a member of national and international committees. In spite of his busy schedule, he came and participated in the discussion. Thank you one and all. Thank you.